Let's touch base with our first guest on the show, Rob Luna, CEO and Chief Investment Strategist at SureVest, a CI financial company, joining us live from Los Angeles with his thoughts on the markets. Rob, great to have you on the show. Thank you very much for your time. What do you think the Fed is thinking right now after the latest print on PPI as well as CPI, both combined together?
Well, I think that, the Fed, Tanvir, has been basically telegraphing to the market for quite a while now that they expect, in their words, this to be transitory. Obviously, the definition, I think, is really scrambling around of what is transitory. I think they're really looking out to 2022, midpoint in next year, where I think growth is going to be very challenging. Also, we know the big Jackson Hole meeting is coming up here in the next couple of weeks. And I think what's really front and center right now, you're seeing it in places like Los Angeles, you're seeing it in places like New York. Restrictions are starting to set back in as you're seeing this Delta variant of COVID come back into place. And I think that's going to give the Fed some continued cover. Month over month, we actually saw a deceleration slightly in CPI. There's some fiscal issues in terms of tax increases that are going to be coming up for corporations. We just talked now about some of the unemployment benefits, where in the U.S. right now, there are literally people getting paid more to stay home than they are to work, which is creating a labor shortage. Once that wears off, the question is, where is the next growth trajectory coming from? We don't see it. I don't think the Fed sees it. And I think you're going to start to see those numbers tick back down.
Yeah, indeed. And so where is the opportunity in that sort of environment if they're moving in that direction?
Well, I mean, I think the opportunity in the market is for companies that are going to be able to grow irrespective of potential lockdowns, irrespective of, what could potentially be rising interest rates potentially. And so we're looking at, technology growth really, which has done really well for a long period of time. We saw it get beaten up when we thought interest rates were going to absolutely, rise. But I think growth's going to be hard to get. So what are some of the companies that would benefit? What I wanted to talk about today was a name like Coinbase, because of the fact it got beat up so bad, 7.5%. But look, they just reported earnings yesterday, 4,900% year over year growth. What was really impressive about that was obviously they're tied to cryptocurrency. Bitcoin got beat up 42% in that quarter. They still grew. This is a company that's growing faster than the NYSE, obviously, 2.2 billion in revenue versus 1.7, but they're at a 30% discount to the market. So that's a name that we really like, and I want to talk about. I'd rather talk about when it's getting beat up than when it's ticking up. So that's one that I wanted to bring to your attention.
Yeah, and I'm glad you did bring Coinbase to our attention, but you hit the nail on the head with there when you said that it's inherently, its performance is tied to the fate or foe of cryptocurrencies. And considering how volatile that sector is, with Bitcoin, I think, falling over 40% in the quarter, how can it diversify its revenue away from Bitcoin itself to be able to have more of a smooth and predictable, or at least, just not such a volatile tracking?
Yeah, well, great question, man. Bitcoin in general, if you look at quarter over quarter revenue in Q1, it represented about 40% of the revenue. That went down to 24% in this quarter. So they are getting a little bit away, a lot away from Bitcoin as they're bringing in other cryptocurrencies, stable coins, which I think is going to be a huge part of our economy going forward across the blockchain, which are going to make remittance outside of the U.S. much more efficient, much cheaper. So and these guys are the major player. The reason they haven't brought a lot of these esoteric crypto coins on there is because they really are stringent in their due diligence. These guys, I think, are the future. And I think a lot of these currencies, like stable coins, are going to play a major role in our economy over the next 10 years.
Mm-hmm. I know you're also looking at cybersecurity plays. You talked about some last time you were on with us, and yet the infrastructure package, $1 trillion, but only a teeny-weeny portion of that was actually allocated to cybersecurity. So what makes you still bullish on these plays?
Yeah, I was completely shocked. I mean, obviously that big infrastructure bill has been pared down. We're looking over $1 trillion now, but less than 0.1% is going to cybersecurity. And, as I was saying, Mandy, the challenge is, I think, this remote, Facebook actually just came out earlier and said they're now kicking out the return to work until next year. Who knows what's going to happen next year, which means people are working from home. When you're working from home on your laptop, you need that endpoint security, and a big company like Facebook needs to be able to secure all those laptops mobile devices. A company like CrowdStrike is the leader. I talked about it last time. I'll continue to talk about it. The stock's a monster. That's one you could look at. And for the enterprise, we like Palo Alto Networks. We think those are two companies that are going to do really well in this environment.
Always got to stay one step ahead. But they seem to be always one step ahead as well, right? The bad guys. Thanks very much.
Thank you both.
Thanks very much for that, Rob. Lovely having you on the show as always.